Hi, my name is Serg Premier. I'm the Managing Director of PartnerVest. I want to welcome you to this particular session, and I welcome Subash Pillai. He heads up the Franklin Templeton Investment Solutions for the region, including the Simple Invest products. Before we go into it, I just want to give a general advice warning to everyone. Anything we talk about today is just general in nature and should not be construed as advice or direction in terms of your own personal investment selections or choices. Welcome, Subash.
Thank you, Serg.
And thank you for being part of it. Certainly, we've enjoyed the performance of the Simple Investor funds. Could you tell me a little bit about Franklin Templeton and about yourself?
Thanks very much, and really appreciate your time and support. So Franklin Templeton, one of the world's largest asset managers, a rich history and a very strong presence in Australia and also broadly across our region. What I would say about Franklin Templeton is that we offer the full suite of investment management solutions, everything from traditional assets like fixed income and equities, also to more private assets like private equity and private debt. So a large asset manager with a real focus on building deep relationships in market and with our clients. So of these 5 funds, we range from a defensive fund that really has the majority of assets invested in low volatility asset classes like cash, fixed income, a bit more of a domestic bias there as well. That ranges all the way to our high growth fund. Here you've got very large exposure to growth assets like international equities, Australian equities, and rather modest allocations to fixed income, which typically provides that cushion in the portfolio.
And about yourself,
But about
Subash?
me, I've been in markets for closer to 30 years than 20 years. And I've had the pleasure of working as a portfolio manager, first in fixed income, and over the last decade and a half in multi-assets. I really enjoy the challenge of investing, the challenge of, really undertaking research, building teams that are focused on identifying how best to steward our clients' capital.
Okay, thanks for that. So, Subash, given the current environment we're in with some volatility and more Trump announcements around the way, what's your view of that and how does it affect the actual investments that you invest in?
Yeah, so look, it's very easy to kind of be caught up in the moment when investing. Looking at things and going, oh, this is unusual, this is volatile. But most analyses of, what are the best investment approaches basically favor investing for the long term, buying, holding, continuing to accumulate what you are investing. And that tends to yield better results. These volatile times can kind of worry us, but typically they're a time for less change rather than more change. And, for example, if you go back to April, when Trump first announced the tariffs, there was a very large downward movement in markets. But since we've seen markets more than correct. So staying invested is a very, very important element. The most important aspect of investing is identifying your risk tolerance, matching that with an investment portfolio and committing to that act of investing continually through your life, and that tends to yield the best results. There's always fun and games with markets. There's always little challenges, and it's really for us as investment managers to identify if there are opportunities to add a little bit more value for clients potentially, or alternatively if there are risks that we can mitigate a little bit. But staying the course is really our key message.
Great. So, Subash, the funds, we love the funds and the clients love the funds as well because of the diversification. How does the diversification help in these volatile times?
Yeah, so thank you. Lovely feedback. Diversification is, there's a phrase, the only free lunch in investing is diversification. And diversification means many choices, right? And many choices that don't behave exactly the same in a certain environment. And by having different asset classes, and even within individual assets, so even within, for example, your global equities, having different styles of manager, you can drive a lower amount of volatility. It doesn't solve everything, but it can be a Panadol when you have a fever, right? It aids a little bit, and over the long term, when you think about that journey, it can make that journey smoother being diversified. It's a very simple approach that yields tangible benefit for investors.
Yeah. Okay. And how do you see things panning out over the next 6 to 12 months?
Sure. So, despite all of I know there's a lot of bad news, tariffs, et cetera, we have a lot of good things happening in the economy. We have a lot of good things happening with companies. Companies' earnings across most developed markets look quite positive for the year ahead. That's an important element for us. Central banks are still easing rates. Yes, news for the RBA hasn't been that great of late, but I wouldn't rule out the RBA making a further adjustment lower. But more importantly, we're in an environment of low and potentially lower interest rates, which tends also to be a positive environment for risk assets. So we are guardedly optimistic. And so on average across our portfolios, we are holding a little bit more growth assets. So it's a positive environment that we anticipate, not a tremendous environment.
Yeah. Okay. Well, thank you very much. Is there anything else that you'd like to share with the clients?
Is there anything else I would like to share with you? What am I sharing on?
On the funds.
Oh, okay. Sorry. Look, thanks, Serg. Really appreciate the opportunity. I think one of the aspects of our multi-asset series is that it brings together a range of portfolio combinations for a wide variety of risk preferences. And within each risk preference and within each portfolio, there's a diversified range of underlying funds and ETFs that we are investing in. And I think what we hope to do is to provide at an attractive price point a very sensible portfolio for pretty well every investor.
Thank you very much.
Thank you.
Really appreciate it. And thank you very much, everyone, for coming into the session.